Hi, hello, welcome everyone. In name of Conversatory Trading Professional Tool, remember we serve family office, asset managers, and institutional investors. Our goal is help to institutions improve their portfolio performance. We help all the stock AI trading today. 23 of January 24, we'll be talking about the behavior of financial markets and all drivers that move the markets in Wall Street. The S&P is rising, again this week. Again. The S&P took other all-time highs, so it's amazing, really. The performance of the last month. Remember, S&P made 26% the last year, and now we start this year with approximately nearly 2% of the return of this index. It's a crazy. Now we'll see what's happening, and we're checking the analysis and investors around the world. Okay. First of all, in this chart, we can analyze the performance of some indexes relevant. In one hand, we have best index performance is we start this year. In the first place, we see the Nikkei 225. The Japanese market has returned near to 7%. 7%. One of the reasons in this Japanese market I started to catch the interest of investors since last year. When you remember, Warren Buffett made a bet of a company for this country the last year. Then we have Nasdaq. Since last year, as you know, many people start to invest around investing AI, technology chips, electric vehicles, and other things related, of course, to technology. As today, the Nasdaq has a return near to 5%. So this great. This great for just start the year. But on the other hand, we have the bad news. We have a Chinese market that is continuous losing, and this year, the Chinese market is losing, yes, near to 10% here. And as well, we have the European market losing near to 3%. So it's interesting thing that I see the balance between these two markets is reflected in the Vanguard Total World Market. The VT ETF is this one. The blue highlight line is almost flat. And the reason is because it's composite, but stocks around all the world. Just nice. Okay. Now we can talk a little bit about what is happening with the money flow in the world. As you see, since last year, when all the problems of the inflation started, we see people look to move their money to haven assets, like money market funds, like CD deposits. One of the things interesting of the start of this year, that it's the money into the money market is near to $8 billion. So it's a big money that maybe key point here. Maybe we start to see when the central banks start to goes down in the interest, maybe in this point the investor will start to move to another type of investment. Maybe they will start to see stocks, private investment, or another things like startups or more risky assets. As you know, this kind of investment has gone down in the past year. The people was so far about the behavior of the market. Continues with the Chinese market trouble. This is a really bad. The performance of the Chinese market is unbelievable. I plot a chart compared here the book price earnings and the books earnings between the Nasdaq markets, these two guys, Nasdaq and the Chinese market. It's interesting because the price value of the Chinese market continue uh, goes losing value. So maybe we have a little theory about what is happening in China market. Why this big economy is losing value. The first thing that maybe I think, I'm not sure, but the government is cracking down the tech sector in China. Many regulations they don't have in the past. So this is our first trouble. And another trouble, the second trouble is maybe you remember, 5 or 6 years ago, the people remember the banks and lenders start to send money, a lot of common people, and these guys, farmers, etc., similar, start investing charts in stocks. They really don't know, and the people start to make money. Of course, the China's index goes up. Everyone is happy. Was happy. And one of the big problem that the sea was, sorry, this is a problem of the recent years, as you see, raising inflation, raising unemployment, and the people just, hey, I have to sell the stocks because I have to pay my bills. It's just this. And now we have these two troubles. We have unemployment rising, we have inflation rising, and maybe they don't want to. No, no, sorry, they have liquidity, so could be another reason why Chinese market is going down. Unfortunately, China's affect all the emerging markets, so this as well is another key point. Just remember. Okay, let's see now what is the most popular bets for this year. This is the four sectors that we see, and I hope that you see as well. See, the first one is artificial intelligence. The second is cloud computing. The third is 5G technologies, is very important. And the last one, very popular right now, BYD and Tesla, electric vehicles. So we think that, of course, we have a lot of money goes to these sectors the last year. Maybe they can go more and more this 2024. Remember, we have near to 8 billions in money markets funds. They will be moved for some sector, and maybe this will be as well. Remember, we start to trade, or we know the market start to trade ETF, bitcoins in 2 weeks ago. So for this way, maybe the money flow. Okay, let's move on to the main concerns that they have investors for this year. The first one, I'm sorry, this is the source of Goldman Sachs report, the 24 report that they launched 2 weeks ago, maybe 2-3 weeks ago, and they told us in this report, maybe the first thing that we have catch our attention is the geopolitical risk. Remember, I think that in probabilities is more than 50%. So in this moment we have a tension. Maybe the risk in Gaza range increase. We have a tension in Red Sea, and all Middle East is unstable in this moment. For another way, we have as well the potential tension between China and United States. Another Another thing again for this this trouble of a trade war that they have. But these two things, of course, will affect the attention of the market for the incoming sessions. In the second place is 24 is election year in the United States. So remember, every year statically, every year when we have election, the S&P 500 almost all time rise up. So for that reason, this is our principal reason that we are bet that the S&P 500 this year will be rise. So we have to place full attention in the second factor, the elections. The third and fourth place are more important drivers was in 2023 was inflation risk again and recession risk again. Remember, some investor and institutional still think that maybe we will be go up in inflation, maybe we will be poised in recession, maybe, I don't know. Okay, we have now here upload a grid index, a fear and greed index that is calculated by CNN. Basically, it's a survey that they makes a professional investors, almost all professional investors of big influencer people in the United States. So now 74% people feel comfortable with the performance of the stock markets. This is great because if you see 1 week ago, 73. So the people is comfortable. The people feels okay with the performance of the stock market. Okay, let's move here. The last factor that we have to see this week is the earning reports. Today, Netflix report its sales and revenues, but I'm sorry for not talking about this. For me, the more biggest news here is that the Netflix announced that they have closed a 5 billion deal with the WWE for extreme live content. This is amazing. So it's a really nice surprise for all people that they want to see her in television live in this year. Another thing that we see this week release incoming for the airlines. So we have this week was Monday, United Airlines. We had American Airlines on Thursday, and another airlines that will be a special interest. The major airlines will release this week. But the next week, the last week of January, we have a more special interest in the technological sector that will release your earnings from in this report. So will be amazing because we'll be seeing movements in the S&P 500. Okay, come see again here and see the forecast that we have for the Standard and Poor's for this year. The S&P, maybe in our perspective, very personal, our perspective, we expect that we see a return near to 10%, 10%. With us, let me see here, we have, yes, Oppenheimer, and we have Goldman Sachs. Funestrat is a big, interesting company that made research. And the other side, BT1, we have another ones, but in the other side, in the bear view, we have JP Morgan, remember, and Morgan Stanley. Okay, maybe at the end of the year, we can determine when was the reason here. Okay, All the things are already happening right in the market. So let's move in for the most interesting part of this uh, seminar. How did the AI portfolio react to all this news? Remember, our portfolio is 100% autonomous and they move around all this stuff. Okay? In the first thing that we see here is a technical analysis. We launched in 2016 the Bloomberg app called Global Trading Indicators (GTI). That's that we have seen is here in 18th of January. We see that bull signal. This is a consensus signal. So we have here the Nasdaq, and up we have the S&P 500 US futures, and we really act when we have a consensus between these two guys. Okay, in 18 in the night we have a signal, a bull signal. But the interesting thing here for show you is the market start to rise as soon as the signal was detected. So this is very interesting. Okay, if you have any question, please let me know through my email. Okay. Now we can move to our performance chart comparison between Quanvestor AI is the blue line and all the biggest fund managers in the world. Remember, the performance is from 2019. Okay, it's real performance. We trade in the stock market since this time. We almost have 100% return from 2019. Compare this S&P good as well. S&P made like 65%. So this is very good. But the most important interesting thing here is the performance of our algorithm in the more volatility markets here in 2020 and 2022. Okay, let's move on. What is the actual composition of our portfolio? In the first place, 38% of participation we have right now in technological sector. In the second place, we have 70% in telecommunications. Our more important bits today are companies like Nvidia, Microsoft, Google, and Meta, and another ones. If you want to see details, just contact us through email, okay? We have today, just month today, let's move on to the next one, near to 4.62% return. Where is the first place of ranking? Compared with the most reputable asset managers in the world. Remember, this is stock portfolio, and we can see, and we trade directly, we trade with interactive brokers. We can see here as well S&P, Goldman, JP Morgan, RRT investment almost less than 9%. Maybe we finish near to 5 this month. We hope so. Okay. Finally, let's just 2-3 slides more. We see important metrics of risk in our portfolio, of course. In this side, we see, for example, the share ratio is almost 2, more than 2. Then we have like here the beta, 138, alpha. We have return, the 4.7% compared versus S&P 500, which only has 1.7. The best bet that we had this month was Nvidia, Microsoft, and Meta. These three guys, give us more return in our portfolio. Okay, just remember for the finish. In this week, the most important things that you have in mind. First of all, the report of earnings of airlines. Okay, then the report of Netflix and Tesla. In the second place of this week is PMI's reports, Japan, French, Germany, Eurozone, United Kingdom, and United States. And the last one, US will be released, GDP, growth, PCE, and finally, European Central Bank will be take rate decision. So we have this with expectation that the market will be continuous positive for the next week, but it's very important. Come to us the next week. Finally, guys, please read the disclaimer. We hope that as well that you enjoys this little webinar. Thank you for your time, really. Thanks, and see you next week. Okay, bye bye.